guys, how's it going? Hope you're all having a fantastic weekend so far. As always, let's kick things off with euro dollar starting on the weekly time frame. So you guys are probably bored to death of me going over this, but it's always useful to always have this at the forefront of our mind because the weekly chart for me is still bullish. We're stuck within this weekly range. We have now taken out that weekly low. We've essentially had that run on liquidity, and now price is starting to retrace to the upside. So we can see that full retrace on the weekly chart. But in terms of just the weekly chart on its own, nothing too convincing yet that we are potentially going to form that weekly high low, potentially filling those remaining orders within this area here to then see that move up there. I can kind of see this going both ways now. We're building liquidity to the top, building liquidity to the bottom. We are coming off that sort of big weekly and monthly area of supply at the top of this sort of larger range within here. So yeah, nothing too clear just yet, but this is kind of where try not to make too many guesses, assumptions and long-term forecasts, and just stick with the blind assumption of what trend we are in until the market shows us otherwise. So for now, for me, weekly chart is still bullish. We've taken out that week low, so there is the potential now that we could be ready to start moving to the upside and take out these highs here, because technically now this is a weekly high, like an internal high, because it still hasn't taken out this low either side. So this is what I mean by we're building that liquidity on each side now, and we really could see this going either way. And the daily kind of summarizes that up quite well, because we've come into to fill up more orders, more of the EQ within that daily wick, right? We didn't quite make the EQ, of course we don't have to, so it's a pretty good sign. A lot of orders have been filled, and we are pushing up into this daily inside bar where we had a bit of a reaction, and now we've pushed up through. So yeah, as we'll take a look in the 4 hour, we essentially had that supply to demand flip on the 4H, which we'll take a look in a bit, and now it's looking like we are probably going to take this high. Of course, we haven't done that yet. There is still the lower probability that we could reverse from here on Monday or Tuesday and then come down and take this low. So of course we have to see if that can happen. But yeah, probably looking like we are going to take this high now and start to come up to the upside, potentially come back into this area here, which then technically would be a daily supply to demand flip, and then we could look for longs from in here to potentially try and push this higher. So yeah, I think I spoke about this a little bit on Thursday evening. This pullback here is a little bit of a tricky one for me in terms of defining whether this is the daily high or this is the daily high here. For now, I'm kind of running with that this is the daily lower high and this would be the low, so the same as the 4 hour range that I'm also working with. So if we do get a bullish break up higher, I will kind of be running with the assumption that the daily has switched bullish, but it'll be a bit of a loose one for me. I know that's, we do like to try and be as black and white as possible, but this one's a little bit grey for me, simply just because of the price action that we had over here, right? Where before, I kind of was viewing that as a daily break of structure, but ultimately it ended up just being, right, a sweep on liquidity. That was the daily high, that was the daily low, that was just a pullback to then come lower. This one could be viewed as similar. Right, it didn't quite make the EQ, so potentially that could be a sign that this is just a minor high, and this could just be a pullback to mitigate something within these wicks, anywhere within this range here, and we could tap in here and go from there. But yeah, what makes me kind of think that we could potentially be switching bullish here more long term is simply because going with the higher time frame trend, the weekly is bullish. We have mitigated a lot of demand now within here, so if we can start to break structure to the upside, then potentially we'll start to look at these more longer term targets. But really, I'd want to see this high cleared for sure to have that kind of real solid conviction that we are going to be going up higher, because there is a part of me that thinks we could come up into here and then potentially roll over and go. So I'm just kind of taking each day as it comes at this point. But yeah, the 4 hour chart was actually quite interesting to kind of end the week. Something I kind of missed a little bit in my analysis on Thursday, but it became a lot more evident on Friday, and that's probably part of the reason why that 15-minute structure that we were looking at was just messy, complicated. It was switching trend all over the place. For me, it wasn't very clear at all, and it's kind of this battle that was going on between supply and demand on the slightly higher time frame. So from a structural standpoint, right, I think the 4 hour trend is pretty clear here. That's the swing high, that was the swing low. We did leave what looked to be pretty weak equal lows there. The only thing that makes this slightly stronger is that movement here did just sweep this low here, right? So it formed this low here, and then price did just take it. So for me, that does count as a sweep of liquidity, right? So let me try and be a bit more clear with what I mean by that. As in, if you draw, right, the liquidity line from that low there and drag it across, it did take it. So it's a tiny bit of, there's not that much liquidity sitting beneath that, right? Just to go a few pips below it. But for me, that does still count as a liquidity sweep. So, it improves the strength of this low somewhat. But I would still expect at some point that low to be taken, right? But of course, liquidity is subjective. It's everywhere, and we never know when it will or will not be used. More importantly, what is the structure showing us? Well, we got that pull back up into the premium prices where we had that daily inside bar of supply. We had the 4-hour buy to sell. I mean, it's not the most convincing candle. This isn't the cleanest price action where price is kind of correctively moving down, and then we get the pivot, and then we go, it's not super clean, but it's there enough. But more importantly, let's not try and kind of get too caught up in how candles look and all that jazz. Let's actually look what happened when price came into that area of supply. Well, clearly there was supply there. We can see the sensitivity to price. It pulled back, right? But then what did it fail to do? It failed to have that minor break of structure to the downside, right? It failed to really close below that low, which is what you should expect when price hits supply, and it should start to want to come down and try and take out these lows. But that kind of, I guess minor area of demand held on the 4-hour chart, and then we pushed up higher. So imagine this was the M1 chart, right? And we were looking at, this is a potential supply zone. Well, what happens? Price comes in, it pulls back, it fails to do its job, right? It fails to form that lower low, and then it takes the reaction point out, right? It breaks and closes above the reaction point. So then what would we do? Well, let's do it how we would normally do on the M1, right? I would draw that out like that. I'd be looking to get long anywhere within this range here, right? That would be your supply to demand flip, and then we can look to get long within here. And that kind of really, it's just something that I kind of missed, wasn't really paying too much attention to in my analysis. And price came back into there, and it's kind of why we had all that chopping around on the M15, but really all it was doing was this kind of 4-hour taking over supply. And then that's why we eventually got that move up. Of course, helped with the news on Friday. I believe, I have to double check, but I believe there was speeches going on with Powell, the chairman of the Fed, which is why we ended up seeing that huge move during New York on Friday afternoon. But yeah, in more simple terms, right, we had 4-hour daily supply. Price came into it, tried to make a lower low, failed to do so, took out the reaction showing demand is potentially in control. We came back in, we swept liquidity, filled up the EQ of that demand, and then we've shot up to the upside. So yeah, we've kind of taken that out now, so I'm just going to drag that across for a second. But like I was saying, right, there is still the possibility, despite that momentum and everything, until it happens, right, we kind of, we don't have that confirmation until price breaks out higher. So we are still within sort of this last real ditch effort of 4-hour supply, where potentially we could reverse from here. I highly doubt that will happen, but we have to still entertain that possibility. Otherwise, I think we will be breaking up higher. But just going back to the daily chart very quickly, if we do get that and we do break up above this high, I will potentially be looking for price to then come back down into this daily flip zone, right? Because then that would have been kind of that I always get this mixed up in my head, the supply to demand flip, right, on the daily chart, for us to then look for potential higher prices and then see if we can get the same thing from there, right, and so on and so forth. But if we do roll over, then yeah, of course, be looking to take that low, and then we can just play the sweep again. So I think that pretty much covers the daily and the 4-hour chart in terms of everything I wanted to cover. I'm just going to delete this just so it doesn't make the chart too messy and we start to jump down into the lower time frame. So yeah, pretty much just covering Friday's price action, as we've already done the rest of the week at this point. So yeah, this is just where, I don't know, I mean, obviously some of you are going to have structure slightly different, right, depending on if you're a bit more aggressive with it or you're a bit more hands-off with it. My default is to kind of be a little bit more aggressive and kind of have that slightly tighter structure, just so it gives me a bit more of an immediate bias, because I'm quite happy to be a bit more active and a bit more playing that ping pong. I don't mind that. So this is kind of why I've tried to be consistent and still count that as my M15 structure, and I continued on with that. But as we can see here, right, going into Thursday, I believe this was the 26th. Yeah, that was Thursday. We then came up into kind of that M15 extreme, right, of that 4-hour buy to sell. We got what I wanted to see. Nice big sweep of liquidity, break of structure to the downside. We pulled back up into this area of unrefined supply there, right. And then we dropped down, and then we had another break of structure to the downside during Asia. So we had that double bearish break of structure during Asia, multiple signs that potentially the 4-hour, right, this, we come back out, let's do split screen, this 4-hour supply zone we've just been talking about, right, potentially it was going to hold. This is kind of my thought process at this point in time, that, we have come up higher into it. We just filled more orders. We filled the M15 extreme supply. We've now had 2, use the paintbrush tool, 2 bearish breaks of structure to the downside. Okay, happy days. Potentially now, that is going to be all we needed to go down, but that's kind of where I missed in my analysis, the potential that we have had that 4-hour supply to demand flip, right? And that's why it was so corrective and it was really struggling to go down. Now, of course, there's no guarantee, right? Even if you see these flips, you can't just suddenly think, right, there's no way we're coming down, but it's just something to bear in the back of your analysis, that maybe you still want to be looking for longs, right, when they came in here and here. That actually, yes, it is against the 4-hour trend, yes, it is against the daily trend, yes, you are buying in that 4-hour and daily premium, and you are buying sort of against these supply zones. But if you can see that they've started to fail to do their job, right, and then you've got nice areas of 15 minute demand to buy in, and there's still plenty of risk to reward to remove risk, right, then actually these are not potentially that low probability trades, and maybe you do want to look for those longs to try and anticipate that actual trend change, because again, not forgetting where we are on the weekly chart, the weekly chart would be on your side if you're looking for longs. We've had that sweep of that week low, we're coming down into the extreme. If this weekly is to stay bullish, then this is kind of the area, right, in which it's going to do so. We've mitigated more or less the EQ of that 4-hour wick, right? So if we are about to switch bullish, then yeah, this is you do have a lot on your side backing you up to try and increase the probability of those longs. So yeah, we kind of took that Asia low. Now, whether you had this as your M15 low or potentially here, I would say there's nothing too wrong with that. Ultimately, it leads you to the same area anyway. I personally would kind of just keep that as a low, because after we got this breaker structure, price did have a pretty significant pullback, easily past the EQ of that leg, right, and then it tried to come down. So for me, that was the breaker structure there. So yeah, we had that double breaker structure there, but this was all during Asia's session, right? You can see price came back up into these buy to sell wicks, right? That broke the low, so flipping from demand there. Then we had the supply, price came back into it, reacted, and then created that demand flip, right? So then, yeah, when price came into here later, well, we'll talk about this a bit because this is towards the end of the London session. But yeah, going into London on Friday, so where's about sort of Frankfurt open, is coming up to this extreme in here, and then what happened, price broke up higher, and then we got that bullish breaker structure. So this is where it was just all over the place. Sorry, I forgot to mention what we were coming off down here was this range flip demand, right, that we spoke about on Thursday, because it reacted from this supply zone, right, that led to the break of the low. So you can go all the way back, right? We've got this candle here, right, which caused the break of that low. Price came into that candle, reacted, caused the reaction to fail. So now you have demand here, right? Price comes into it, tries to go lower, and then takes it out. So that supply is strong supply, right? Price then comes into that supply, reacts, fails to do its job, fails to make a lower low, and then takes it out. So that's why I said, right, you can take the entire range, or you could refine it to just this candle here, or of course you could refine it to just the wick. And then, all three are obviously, makes sense to build trade ideas around, but that's why I'm happy to be a bit more loose, take the entire range, and then just trade the reactions within, of course, if it fits within my trading hours. Yeah, so on and so forth. So that's what happened during Asia. We came into there. We then caused another flip here, but then we had a bullish breaker structure to the upside. And this is where, yeah, it was just a little bit confusing and all over the place. But actually, this is what I was saying, right? If you were kind of viewing then that as the 4-hour flip there, then that can give you a lot of confidence of why we've been changing so much. And then now we switch bullish again. You can be happy to take the shorts in case we do go from here, but then you can also be happy to take the longs in case, that is that 4-hour flip and we are ready to go. So it's kind of just, not being 100% sure which way it's going to go, but then trading the extremes, right? Trading the just after the breaks of structure down here, and then, yeah, looking for those moves and kind of trading either way, and just, I guess, hedging your positions, right? Removing risk when you can, and then just holding on to both longs and shorts and seeing which one wants to play out if you want to trade that way. Or you could literally just, get in, get out, take your 5R, whatever way it is you want to manage. The world is your oyster. So yeah, we got that bullish breaker structure to the upside. We then came into the the refined wick, I should say, where there was a pretty nice flip entry, which was this one here. Now, this one was a little bit tricky to see just purely on the M1. It is there and it is valid, but it was a lot clearer on the 15-second. So we had that first initial touch in, right, around 7:30, so before London Open, ended up being a bit of a fake move, right, and then we came up to kind of build more liquidity. For me, there wasn't a flip here on the M1 because, yes, this entire range is demand, right, but there's no real reaction. There's a bit of a reaction there, so potentially that would be a 15-second entry. Does it come up to that? Yeah, it doesn't come up, so potentially you may have taken that. It's not the cleanest from an M1 perspective, but then we've got that sweep there. and then this is where we had that change of character because we took the high, which means that this is the low. So then when price came down and wicked it, that would be your change of character. And when you see something like that, right, if you haven't noticed where a flip occurred, you can try and see if you've then you can spot it. And what you can see is what happened, right? Price came down, it created demand to wick that high, right? On the lower time frame, it's clearly going to be demand. Price then comes back into it, it reacts, and then that's what leads to the change of character. So I appreciate sometimes it can be a little bit hard to see in the moment, but this is where you can read 15-second price action on the higher time frames here, and that is where you have your zone there, and then price comes back into it, and then we drop off, and then we created another flip here, but price didn't come back at that point until much later over here around just before New York. So yeah, that was the trade there. I'll tell you what, let's have a quick look on the 15-second and see what it looks like. So yeah, here you can see, I mean, this is another thing that's a really good piece of confluence, is when you see price kind of aggressively move up and then literally just get, aggressively slap back down, for lack of a better phrase, right? It's just a kind of aggressive in and out. It's showing you that big money stepping in. We react to demand. It should make a higher high, but it fails to do so. We get that change of character, and then you see price coming back in, and then yeah, just hit at market sell, or if you can do your limit order quick enough, then you're in a pretty decent trade there. So that's why it's a lot clearer in the 15 seconds. But yeah, it is visible in the 1 minute, but it was a little bit trickier. There's not, we have of course seen much cleaner examples of flips. So at this point where we're on the M15, so this is where, we have switched bullish technically if you've kind of marked out your structure this way. We're acting off supply, so we can look to push this a little bit lower. Now there was kind of sort of two areas I would have been looking at. One would be this area of demand, which I haven't drawn on, right? This area here, we can see it was, in hindsight, of course, with the benefit of hindsight, it was quite a clean push. So there was not real too much inducement in a leg, and it ended up being liquidity for the flip just below. But let's say you were looking at this area here, right? So you'd be looking at this price action here for a potential long. There was a valid flip, so you may have taken a loss, which was valid. So let's see this. How I would have viewed this would be, take the whole range, right? Or you can take the refined candle, either way. I think if you took let's say if you took just the candle, I don't think there was an entry really, because price kind of just spikes up straight through. But if you took the whole range, right, and you're just looking for a reaction as soon as price comes into the range, then the way I would have viewed that was that would be the reaction, right? It came down here, it never took out this low, and then price closed up above the reaction. So then when price came in here, that would have been an entry for me, getting long on this demand here. Yeah, and of course we can see, 2 pip stop below the low, or 1.5, either way, right? It would have been a loss, would not have moved enough in profit to take that. But that's fine, right? It's just a loss. Losses are of course going to happen, they're completely unavoidable. And then we come lower into the flip zone. But what I really liked about this is it mitigated that M1, really nice M1 candle within there. Real nice build of liquidity, came in. Now I was initially looking right, I would have been looking at that inside bar, but then if you see where the reaction happens, that violent reaction, look left doesn't make sense. Yes, buy to sell candle there, which was reacting to this area of demand here, so still makes sense. Price moves in, aggressively moves out, fails to make a lower low, pushes up, boom, real simple entry there. 2 pip stop can cover the low there as well, being pretty conservative. Yeah, and then that ran, I mean, it's going to depend on your management, but kind of peaked at around 7R, so obviously pay yourself at least on the way to at least that minimum remove risk. And then there was that flip there, which you could have been bold, taken, left a risk entry in there. Probably wouldn't necessarily advise that personally. So trade the reaction. Now on the M1, the flip for me, the way I view it is like this, whether you take the whole range or just the inside bar. So you see how I didn't break it straight away. So then that's price coming in, trying to make up a higher high, and then it goes. So then I would have taken this whole range here. And we can see it didn't get tagged into later if you left your limit order on, so it built some nice liquidity, but of course price did have to then switch bullish again on the M1 to get there, so depends on whether or not that's in your plan. You may have wanted to play a reaction, but yeah, it's not really looking like there was anything on the seconds time frame, so nothing too clear there for me, unless I think actually there may have been a 15-second entry over here. Let's see, I think it was quite clean on the 15-second. Yeah, so you can either have the whole range, or of course you can refine it, right, to that being the demand. Price comes into the demand, it tries to make a higher high, it then breaks below the low, right, so you get your failed reaction, make it dashed right or whatever, and then what happens, price breaks through, right, and this is where you got to be quick. Price comes back in, just hit at market sell, and then you're in the trade, right. 2 pip stop should be more than fine there. Let's see how it sizes up. Yeah, 2 pip stop just above the highs, and then that's how essentially you would have caught that trade. So you can see this price action I've shown you on the M1, but the difference is that you don't get a closure below, because this is where the M1 wicks below and closes back up. But as it's closing back up on the M1, that's essentially where you're getting tagged in, right, on the 15 second. So yeah, that is a bit of a difference if you are going to use the second time frame in that way. But if you're purely talking about M1 and you're waiting for candle closures rather than just wick breaks to count the reaction as truly failed, then for me, you would have had to have left your order on and got tagged there. But I'm not personally a fan of leaving an order on when price has kind of gone that far and then has to switch bullish again to get back. That's where I'd be looking again for the reaction to play over there. Yeah, and then this is kind of where price started to get really volatile going into New York around the news. We ended up then mitigating essentially lower down into this candle. You could have, refined it all the way down to the wick. But yeah, I probably wouldn't be trading going around to that news anyway. And then there's not really a valid flip here for me personally. That's just price coming back into this sell to buy M15 candle and a shut off. Obviously not going to leave limit orders around all of that volatility going on, and then yeah, just leave that to end for Friday going into the weekend, where at the moment we're pausing at this very, very extreme M15 wick at the top. So yeah, there is the possibility you could look for some cheeky shorts here on the open on Monday, right? You could look to play this back down into towards sort of the discount of this M15 leg, right? So for me, I haven't actually marked on the structure. So this is where structure is a bit of a mess on the M15. It's all over the place, right? Because we switch bullish, then we switch bearish, right, and then we switch bullish again. So yeah, it's an absolute mess. But look, when price is like this and it's sometimes messy, if you want to trade it, just be nimble, trade in both directions. Like I said, be open with your hedges. If this type of trading, when the market environment's like this, is quite conducive. It's good for that sort of 5R in and out type of trading. But if you're kind of trying to do that swing hybrid where you're getting those intraday entries, but then trying to swing them for those those swing entry sort of targets, not great. You're going to have to be very open to taking a hell of a lot of break evens and getting both the longs and shorts, and then just holding on to them and seeing which way the market wants to go. So yeah, it's just going to depend on your trade plan and your personality. But if you see this and you're more of a kind of that swing trader, just stay away, look at another pair, or take a few days off, right? Obviously keep an eye on price action and wait till it clears itself up a little bit, but you don't have to trade this. I know it can fall easy into the trap, especially this week when I've kind of been doing almost daily market breakdowns where I'm kind of show every sort of possible trade. You kind of have to realize that these are more sort of markups of just showing, this is how it could have been done. These are valid positions, but not every valid trade necessarily has to be a trading opportunity that you take and you risk your capital on, right? Of course, it's going to be different for every trader. Your own risk profiles, yada yada yada. We all know that jazz, right? But I know how easy it can be to kind of think that you need to be in it, or like, oh, I should have taken that trade probably, or there's obviously going to be losses within there as well that I haven't seen or haven't covered, which are probably just as valid as well. But you kind of have to ask yourself, is this the type of environment that I want to be trading in? Potentially not, right? Just wait until the market clears itself up and you see those, those picture perfect trades, then yeah, that's when you step back in. With this style of trading, you literally need one trade a month on euro dollar, right, to make a really, really, really tidy return, right? So yeah, just I kind of wanted to make that point of don't get too caught up in trying to catch all of these moves. It's more just, this is just literally, I view it as an exercise of going back through and just learning price action, studying what happened, and just seeing how you can potentially use that for future scenarios. Not saying like, I should have caught this trade, I should have caught that trade, I should have caught this trade, because it's just a recipe for disaster in your mind, because it's just going to generate FOMO, right, in the live market if you're kind of interpreting this that way when you're going through price action. Because then when you're sitting there on Monday, you're thinking, right, there's going to be these trades I need to catch, and it can end up just you taking subpar setups. But yeah, anyway, in terms of kind of the hard time frame forecast, I've kind of already covered that. There is the possibility, of course, until we take out this high, until we take out the supply, that we could roll over from here. So if you're feeling brave on Monday, you could look for potential shorts to push this back down into the discount. Otherwise, probably expecting price to break out, and then we can look for a pullback into those demand flips, and look for price to start to push up higher. And in any old areas of supply, right, there's kind of these buy to sell wicks, little kind of shitty candle there, potentially look for reactions. But yeah, safest way as always, if you want to look to play counter trend positions, is to wait for at least an M15 change of character, use old areas of supply to play pullbacks into demand, ideally in the discounts, and then look for those longs to then hold those longer term and see if we can start to run these highs up here and push higher. Otherwise, if we do start to break down, then yeah, we can start to look to run these lows. As simple as that. No need to overcomplicate it. Pound dollar, so haven't looked at this in a little while. Weekly chart for me still very clearly bullish. I'm personally counting this as my weekly low. This is my weekly high, so still plenty of room for price to pull down a lot deeper. We are of course coming off this extreme weekly supply at the top, pretty much the top of the monthly range. So there is a possibility that the dollar may be powering up and we could come lower. I'm just not a massive fan of that thesis, especially on pound dollar, simply because this area of supply, well, it failed to do its job. It never got a candle close below the low. And this for me just looks like a massive liquidity sweep. So, in the back of my head, that means, of course it could take a few years to play out, but I would be expecting potential higher prices. We're very, very sold off on sort of this longer term range. So yeah, that will remain to be seen, but potentially we'll be coming down into sort of this monthly flip here, right? Because we had some internal supply, price reacted and pushed off. So we could be coming down to around that sort of 130 handle before potentially moving up higher there. But yeah, the weekly price action is a bit of a mess because we got the sweep of that week low, right? It was a week low because it never took out the high. We then swept that liquidity, right? It's very minor, but it counts as a sweep. And then we pushed down, we swept that low, but we failed to even break these highs here, right? We just reacted to supply and now we're coming back down. So weekly chart's not giving me a lot in terms of kind of this more short-term price action. Don't really have too much to add, to be honest, but other than we do have a lot of room for it to fall, for it to still remain bearish. Daily's a little bit clearer, but it's bullish for me until we take out either this low or of course we make a higher high, but ultimately we're just stuck within this big range. So this is kind of more, right, that environment is conducive to just being just playing ping pong with the 4-hour ranges, right, the 4-hour supply and demand zones, and yeah, just being a little bit more neutral, I guess, as much as possible. But if you're trying to be super strict and mechanical on the trend, for me that is the low, that is the high. At any point we're expecting that higher high to form. We have now come down, swept that liquidity, we've mitigated that extreme sort of FU sweep wick, right? We had a really nice reaction from it. We got that daily change of character, which is essentially was the 4-hour switching bullish, and now we've pulled back down into the extreme, right? Some extreme demand within here, and we have had a decent reaction, but we're already struggling to come past this daily inside bar. But it's kind of like euro dollar. We had that initial reaction and now it's looking like it's failing, and potentially we are going to break up higher. But yeah, it's kind of one of those cases, it's not super clear long term. We're building liquidity here. We're kind of building these bigger, larger double bottoms now and kind of that mini double bottom there. Liquidity tons on both sides, but the way I'm trying to kind of keep it simple, and I'm viewing the daily as still bullish. And then if we take a look at the 4-hour chart, similar thing. I'm being a lot more lenient with the structure on this compared to euro dollar. I'm being a bit more sort of conservative with it and just looking at the bigger swings. So now the kind of way I'm viewing the 4-hour is that as a pullback. That's your movement down. That's one big 4-hour pullback. That's your movement down. We mitigated that extreme demand. Then this is one big swing leg up, breaking structure, and then this means this is all one big pullback down into the extreme, which we know kind of GU prefers to kind of move in that way. We've come up to this minor area of supply, right? We've reacted, we've failed to take out that low, and now we've closed back above the reaction. So we've had that 4-hour failed reaction, very similar to EU. Let's get rid of all this. So yeah, now potentially looking for price to come down towards this area. Ideally the extreme inside bar, keep an eye on that wick as well. And then yeah, just see if we can then start to break up higher and take out these highs up here. So that's kind of the way I'm viewing it. But you could be a little bit more tight with your structure and trade it kind of more the way that I would view EU and kind of look at these more sort of smaller trends in price, right? So that would be a pullback, that would maybe a movement up, and then we switched trend here. We took out that low, right? And then we took out this high, and now we're bearish, right? And we're still bearish until we take out this high. So ultimately both ways are right. It's always right. What matters most, and I always kind of try to go on about this, is just be consistent with whatever you do in your approach. Bring some method to the madness, and as long as you do that, you back it up with data. You can literally do things backwards to however I do it. I mean, I don't really know what that means in reality, but you can make something up, but as long as you always apply that made up thing, you do it the same way, and you prove that it has data to back it up, then congratulations, right? You found your edge in the market. And that's all we are doing. So yeah, kind of a bit of a random rant. I didn't mean to go on there, but hopefully that makes sense. So yeah, that's kind of the way I'm viewing pound dollar at the moment, just being a lot more lenient with the structure. That is that bullish trend change on the 4-hour chart. This is one big complex pullback. We've mitigated the extreme. I like how strong that reaction is away. It's a pretty strong reaction. That nearest area of supply, which was a flip, right? We had demand here, reacted, came down. That supply should have made a lower low, failed to do so. We've come up higher. So let's see if we're going to pull back into here and then, continue to try and go up higher. I haven't drawn every little bit of 4-hour supply. I'd probably, we may get a little bit of reaction from these areas here, but ultimately you would expect that liquidity to be swept. And then I cleared up this area here. If you take a look on the 8 hour, there was a nice inside bar there, which kind of cleans up this whole bit of messy price action a little bit. So potentially see decent selling opportunities from there. And on a drill on this one, I don't think it's anything too major, but the way I kind of viewed that was there was a bit of a flip here, but I'm not a massive fan of it. This is something I want to collect a bit more data on and try and spot more in a live market, which I'm trying to get my head around. So it'll be interesting to see what you guys think about this as well. Right, so essentially, if you view this as demand, the reason why I'm talking about this is because price comes in, right, it reacts, there's that bullish, more of a 15-minute reaction, right, and then we go through. So I've just drawn on those buy to sell wicks as a demand to supply flip, right, so that's the reason why I'm viewing it. But the reason why I think maybe this isn't as significant is because I have to ask myself is how significant is this area of demand? Well, this area of demand did not achieve anything, right? It didn't even take out that minor high. So I'm kind of trying to work with that theory of, yes, this is a flip because this is valid demand, right? And then this is the supply that took out that demand. But how strong is this demand? Well, it's not that strong because it didn't achieve anything. It didn't take out any highs or anything. So although this is a supply flip, does it really take a lot of supply to take out this demand when there wasn't that much demand in the market there anyway? If you try and follow my thought process there. So at the moment, I'm not separating those out between kind of strong and weak demand zones in terms of looking for the flips, but it's just potentially something to think about. Just be interested to see if you guys find much or have any thoughts about that as well in the market. So yeah, that's pretty much just kind of as far as my forecast goes with pound dollar. Daily's bullish, weekly's still bullish, weekly's still bullish, but there is a lot more room. Let's sync these all up. Weekly should be up here, top left. So weekly's still bullish, but there's a hell of a lot more room for this to fall off, and we are coming off kind of that extreme area of supply, and it's starting to get a little bit messy. Daily, we are technically still bullish, but we are within this big range, so a bit more of a kind of ping pong style. But from the bullish argument, which is good, we have had that daily change of character. We've come back into the extreme, and we are starting to react. But yeah, would like to see it break at least past that daily inside bar to start to come up higher, and see if it can try and form that higher high, the internal higher high, right? So that's why it's more of a 4-hour trend change. Right, we've pulled back into the extreme, we've had that flip, so we'll be looking for price to come into demand and see if we can continue that move and finally take out those highs there. And that's about as simple as I can keep it, really. And then last but not least, we have Aussie dollar, which is very, very clean since I've been looking at it. It's kind of one of those pairs now I wish I had probably been looking at a little bit more. Maybe keeping a bit more closer on this when I start to get back into the thick of live trading. But yeah, what we've eventually had now is we've come down into this refined weekly demand zone, and we've had a very, very, very nice reaction. It will just remain to be seen now is that a pullback to form a high low and we go, or actually is this the one big weekly leg? This is going to be used as inducement for lower prices, and actually all this reaction is just a short-term reaction to create a bit more liquidity, to create a bit more of a double bottom, and potentially we are going to roll over and come down lower, and the dollar is really going to start to power up. Okay, so it's kind of that, it's an interesting point where the dollar is across these dollar pairs now to see whether or not that is going to happen. So I'm keeping it very dumb and simple because I just think it's the easiest way to trade in terms of structure, keeping it mechanical. And if I look at the daily, yes, we've come into that weekly level. Yes, this could be a weekly high low to start to break up higher, but why try and second guess that? Let's just see what the daily does first, because for me, that's the daily lower high, that's the daily low. Until this high is taken, I'm going to just assume that we're going to continue bearish. Once the daily switches bullish, then I can start to entertain the idea that potentially that weekly high low, right, is in play. So that's kind of the way I would view Aussie dollar. We're in premium prices of this leg, pretty clear area of supply. The only thing that's not great is it's quite a clean push, so potentially we may use that as liquidity and then mitigate something within these wicks in here, right, and then potentially roll over. Or of course we could literally react, have that flip, break up higher, come back into demand, right, and then we're off, and then potentially that weekly higher low is in play. So that's kind of how I'm viewing the higher time frames on Aussie dollar. For our chart, we came into that inside bar, so I had a couple of 4-hour zones drawn on from ages ago, and we ended up reacting from this one, right, this nice inside bar. I do have this sort of FU one right at the very bottom extreme, which we may come down to for that next daily bearish leg if we get it, but this is what we're coming off at the moment, which of course makes sense. So we've essentially had, like all the dollar pairs, we've had that supply to demand flip, we've had the inside bar, which pretty much actually led to the true breaker structure that closed below that last daily low. So price came into it, tried to make that lower low, right, but it failed to do so. Price then came up, caused the flip. So yeah, pretty nice area there for that demand to supply flip, but shorts are definitely, for me, the favored trade at the moment, if the trend is to remain bearish. So 4-hour inside bar there. and then we have the extreme inside bar at the top. So yeah, anywhere within those two zones or the whole daily zone as a whole will be very decent trades to then look to run those lows. But of course, just like what we've seen on euro dollar, keep an eye out for potential supply to demand flips if we are going to break up higher and get that daily trend change. Other thing, yeah, so this is the daily high, right? That is the daily low. So if we do break up higher than here, this could be that run on liquidity, right? And you can start to look for potential extreme moves down from up here if we are to potentially break lower from there. And that kind of wraps it up. There was actually a really nice 15-minute setup here that I did notice, where we sort of had this last area of supply. Price came into it, reacted, pushed up higher with a lot of momentum. This is just textbook, right? Build all of this liquidity here. Price then aggressively broke through that, and obviously that nice V-shaped move back up into that last area of supply. It reacts, it pushes up through, and then boom, into the extreme. There's your flip, right, just before the news, and you're off. Just really, really nice textbook example there of supply and demand in action. But yeah, Aussie dollar is looking very, very clean. Of course, there is that potential we have, but we may be forming that weekly high low, and we may be pushing up higher. I'm going to go out on a limb and say that we're not. I know I'm forecasts like that and guesses they mean jack shit, right? Who really cares? But gun to my head, I have a feeling the dollar's going to power up now. That would be my gut. So yeah, who cares, right? Just be mechanical and dumb, right? Have run with that blind assumption that we do with market structure. The daily's bearish, but pulling into the premium up into supply. 1, 2, sort of 3, sort of potentially that inside bar there as well. Got some nice liquidity in front of it. We do push up higher. Real kind of clear and obvious zones to start to look for those 15-minute changes of character to the downside, or you want to be a bit more conservative, wait for the 15-minute to actually truly switch bearish to get that breaker structure to the downside, to get that 15-minute trend change, and then you can start to look to gun for that daily swing low. So yeah, that wraps it up. Reasonably clean price action across the board. So yeah, hope you guys have a good week. The next Zoom call will be on Monday. I believe I don't even know if that's September or not, but yeah, I'm sure you guys can figure out the date. I'll post the Zoom link as always during the day on Monday, and then for those who are about and attending, I will catch up with you then. So yeah, cheers lads, have a good one.